Welcome back, everybody. Derrick Sue, your East Oakland advocate. Well, on my last episode, I talked about how I gain all my money back and my investments, what I'm doing with my investments right now. And here's a funny one, because one of the replies that I got on the comments was that, no offense, but I wouldn't take it at financial advice from a homeless person. Okay, I have plenty of friends that are housed that listen to me because of my experience with money. But here's a fact that you may not be aware of. All of those people who caused the subprime rate collapse back in from 2006 to 2009 are still in doing business. They still have their licenses. They're still giving bad advice and harming people. They didn't go anywhere. They just went to a different operation, and they're still causing harm. That's why I refuse to work with any agency, any investment firm, because the high risk that I will likely end up with somebody who caused me to be in that situation back in 2007. That's why I won't go back into the stock, bond, and mutual fund market, because they're still licensed. Nobody lost their license in that fiasco. Nobody. Businesses went out. Large firms like mine, Smith Barney, had over 150 years in investment business, and they went bankrupt. And I lost everything because of them. Washington Mutual and Citibank. And you think that taking advice from a homeless person who has decades of experience in the financial world has bad advice? No, I'm giving you the best possible advice to keep from happening, for you to keep from happening what happened to me. If you're in the stock market, bond market, mutual funds right now, and you're thinking, wow, this, I've been losing money, or it's very volatile, I have the possibility of losing money, and what can I do about it? With stocks and bonds, the nice thing is that you can move it and take it out of the market and save yourself. It'll cost you a little bit, but it'll cost you less to take it out and save it, rather than keeping it in there and it go away. And the reason why I'm saying that right now is because right now we are seeing a lot of volatility in the tech sector, in manufacturing, in sales. We're seeing it across the board, also along with high food prices. And our government is saying that they're bringing inflation down to that 2% threshold. Well, that 2% threshold doesn't mean shit on everything else, because food is still expensive. We're paying more now than we have ever in the past because of transportation costs. Transportation businesses are going out of business. They're going bankrupt. Look at Yellow Trucking. They went bankrupt. They were the nation's largest trucking firm, and they're gone. Now I'm seeing a lot of Old Dominion, which I know its headquarters is back on the East Coast, but they're taking up a lot of the slack, because I've been seeing a lot more of them out here, along with DHL, DHE, and several others. But again, this homeless person is going to give you the best possible advice based upon all of my 64 years of experience of life. I'm not going to steer you wrong, whether you accept that information or not. I don't care. It's irrelevant to me. But I want to make sure that you don't end up with a crooked investment person. I had investment people. I had a lot of them. Think about Washington Mutual, Citibank, and then Smith Barney. They cleaned me out. $3.25 million. Fortunately, I've replaced all of that, and I've doubled that income because of the confidential informant work that I did to regain that income. Now that I'm back on my feet, I don't plan on ever being poor again. That's why I've set up my accounts the way that I've set up. While interest rates may fluctuate, the nice thing about the federal rate, the federal interest rate being as high as it is, near 7%, nearing 8%, that means that I'm getting at least 5% return on my money, because those monies that I put into that CD also help that bank finance homes, finance cars, and other loans. And the interest off of those loans are the income that my CD creates. So all of those CDs will create a very nice, safe income. As long as the percentage rate stays at least 5%, I'll get $14,000 out of my $250,000 CD investment. A 1-year period paid at 5.85, or no, that one would be paid at 5.05% to get 14%. So that would be one of the lower points. When your CD interest rates drop below 4.5%, that's when you start looking elsewhere. You might want to look at treasury bills. Treasury bills might be higher. U.S. savings bonds, the old U.S. savings bonds, are an incredible investment also. If you want long-term investment, that would be your better and safest way to handle an investment. And you can get them at your bank. They're very easy to get. And you typically pay half that amount. And in 5 years, that U.S. savings bond matures and it's paid out at the face value. But the nice thing about savings bonds is that the interest continues to accumulate. We've seen people with savings bonds from 30 years ago being paid out thousands of dollars because of the interest compounding. And so having a U.S. savings bond is also a good thing. Just that you want to make sure that you keep it in a safe place and that it doesn't get misplaced, because they're not replaceable. They are issued one time and no replacements are issued in the event that they're lost, damaged, or stolen or destroyed. So you must keep it in a safe place. Another good, safe way to hide your money or to protect your money from inflation would be buying precious metals. Back when I was working, and in my truck, I had a special safe vault in my truck, and I carried $10,000 in cash. $10,000 in cash is not that much when you look at it on a stack of $100 bills. It's not much. Then I also kept $50,000 in precious metals inside of that safe, along with my weapons, ammunition, and other tactical gear for counterterrorism. And so there was $60,000 that I always kept on my person in that truck. These are the safest ways that you can protect your monies right now without the volatility that's going on in the market. And that's what I'm mostly concerned with. Also, our school systems, they need to be actively teaching financial literacy. Our schools teach nothing in terms of financial literacy, and that's why we have so many people struggling in America, because they don't understand how our monetary system works and how uh, compounding investments and CDs, treasury bills, how all of that works. We need to have our future students, our future residents of America financially literate, so that we don't have the financial problems that we currently see, and the struggles that we currently see. If everybody was more financially literate, people would be better off. They would understand uh, the decisions that they make in terms of finances. So these are all good, solid uh, advice for volatile situations like what we're currently seeing in the investment market right now. Yes, the numbers look pretty good on the Dow Jones: 38,000, 34,000, 35,000. All of that looks good, but is it good for you? Because as fast as things go up, things go down. With a CD, while the rate goes down, it won't be affecting you. You've already collected your compounded interest through your CD, your T-bills, or any other financial instrument other than stocks, bonds, and mutual funds. Right now, stocks, bonds, mutual funds, like I said, too volatile for me to even consider. And not that I would even consider it right now, because I had some of the worst financial planners who gave me the worst advice, bankrupted me, took all 3.25 million of me, and you want to listen to them? Come on, folks, let's get real. There are folks with real world experience like myself that are better, that will give you better, safer, and more profitable information than a lot of those professional uh, investment brokers. Don't get don't get bamboozled, people. Don't let them steal your money. That's why I don't deal with any investment houses anymore. I have a financial planner. We talk about the best way to have the least amount of risk to create an income. And that's what I'm doing. And that's what I did with talking about building an income for the future with no risk. And that's how we do it. Thanks for joining me today. We'll be right back.